You know, every once in a while, a stock makes a move that's so big, so sudden, you just have to stop and ask, what on earth is going on? Well, recently that company was Astrana Health. So let's dive in and unpack this whole thing.
So get this. One day, Astrana Health stock, ticker ASTH, just rockets up by over 25%. I mean, in a single day. A jump like that is never random. It's a massive signal from the market, and we need to find out what it means.
So that's our big question for this explainer. What could possibly light such a fire under a company's stock and cause this kind of surge in confidence seemingly overnight? We're going to piece it all together. Okay, first things first. Let's look at the actual trigger event, the spark that started this whole bonfire. And there it is. The company dropped its fourth quarter earnings report, and the numbers weren't just good, they were way better than anyone on Wall Street was expecting. A surprise that big sends a jolt through the market. It tells everyone that something very, very right is happening inside this company. Now that earnings beat, that was the initial shockwave. But the optimism here runs a lot deeper. Let's dig into the underlying reasons investors are suddenly feeling so good about Astrana's future. And here's what happens next. When a respected analyst firm like Needham comes out and not only says you should still buy this, but also jacks up their price target to $30, well, that's a huge vote of confidence. It's like a green light for the big money investors to jump in, which just adds more fuel to the fire. And this chart just shows you the sheer scale of the surprise. I mean, look at that difference. Astrana didn't just step over the low bar that analysts had set for them. They pole vaulted over it. That's the kind of thing that gets investors really, really excited. And here is the headline number that's got everyone talking. The company pulled in almost $3.2 billion in revenue for the full year. But here's the crazy part. That's a 56% increase from the year before. 56%! That's not just growth, that's absolutely explosive growth. But come on, a 56% revenue jump can't be the whole story, right? A smart investor always looks at both sides of the coin. So now, let's pivot and take a hard look at the risks, because that's where you get the complete picture. And this, right here, this slide gets to the heart of the debate. It's the big but in the Astrana story. Yeah, revenue is shooting for the moon, which is fantastic. But historically, the company's track record of turning all that money into actual bottom-line profit has been, well, a little shaky. In fact, it's often trailed its competitors. And that profitability problem, which you can see in their inconsistent earnings per share, or EPS, is just one piece of the risk puzzle. The company also depends heavily on government money from Medicare and Medicaid. That can be great, but it also means any little change in government rules could have a huge impact on their earnings. Throw in a history of being a pretty volatile stock, and you've got a recipe for some real uncertainty. So, with all those risks on the table, you have to wonder, why are so many people betting big on Astrana's success? Well, it all comes down to their long-term strategy, which they believe is the answer to all those concerns. So here's their game plan, and it's basically a three-part play. First, they buy up other companies to get bigger faster. Second, and this is the big one, they're changing the entire way they get paid. And third, they're using tech, like AI, to get smarter and more efficient. Okay, that second step is the real game changer here. So let's make sure we get it. Shifting to full risk contracts flips their whole business model on its head. Think of it this way. Instead of the old model where doctors get paid every time you get sick, Astrana gets a flat fee to keep you healthy all year. The incentive completely changes from treating sickness to preventing it. For investors, this is huge because it points to way more predictable revenue and maybe, just maybe, a clear path to consistent profits. And it looks like the people who know the company best, the executives running the place, are all in on this plan. When you see leaders buying up their own company stock, or the company itself buying back shares, that's them putting their money where their mouth is. It's a huge signal that they believe they're on the right track. All right, we've looked at the incredible surge, the case for why you'd be optimistic, and the very real risks that are out there. So let's wrap this all up and put a bow on it. This slide basically lays out the entire tug-of-war. In the bull corner, you have mind-blowing growth, Wall Street's blessing, and a really smart-sounding strategy. And in the bear corner, you've got nagging questions about profits, a reliance on the government, and a bumpy history. That massive stock jump we saw, that's the market placing a huge bet that the bull case is about to win this fight. And that really is the ultimate question, isn't it? The latest numbers suggest Astrana has a powerful engine, and it's revving higher than ever. But the challenges are not going away. So are they building a healthcare giant for the next generation on a solid foundation? Or is all this rapid growth just papering over some serious cracks? That is the billion-dollar question everyone's trying to answer right now.